Hi, I'm Nicole Pecoraro, and this is the Alt Starting Point. What are the primary categories of alternatives and the overall benefits? Alternative investments seek to provide enhanced diversification, growth, income generation, all the while mitigating risk on the downside and helping protect against inflation. The growth of alternatives provides compelling opportunities to discuss how these investments can address your client's particular investing goals. Let's explore the primary subsets of alternatives and how you can implement them. Private credit. Private credit is an increasingly popular diversifier to traditional fixed income. Product innovation has made the asset class more accessible through non-listed BDCs or business development companies. BDCs primarily invest in loans to U.S. middle market companies. These middle market companies are often underserved by traditional banks, yet have strong growth potential, leading to improved creditworthiness and higher returns for lenders. Hedge funds. Hedge funds aim to beat the benchmark in both up and down markets. Hedge funds are actively managed to exploit market inefficiencies using sophisticated strategies like long-short equity, event-driven investing, and arbitrage. You can build a portfolio of individual single-manager hedge funds or opt for a fund of funds. In this case, you're hiring a manager to provide access to hedge funds while managing the selection, monitoring, and adjustments of individual fund managers within the portfolio. Private equity. Take a moment to consider this. 86% of companies with revenues of $100 million or more are privately owned. This means those investors focused solely on public markets could be missing out on significant growth opportunities in our economy. Private equity offers the potential for substantial long-term growth while effectively minimizing the impact of short-term market fluctuations typically found in the public equities. Like hedge funds, you can build an individual portfolio of private equity funds over time. Many advisors prefer private equity fund of funds, products that offer more investor-friendly terms, such as perpetual or evergreen vehicles. Real estate. While many advisors are familiar with publicly traded REITs or real estate mutual funds, many are now turning to private real estate for additional diversification, more stable income generation, and higher return potential. In addition to real estate private funds, there are now many non-listed private real estate options available, and these options can offer U.S. investors several potential tax advantages. Infrastructure. Like real estate, infrastructure has various access points, including private funds, mutual funds, and perpetual funds. We believe including infrastructure in your real asset allocation is valuable, especially with its potential to provide long-term growth with a fairly high degree of reliability, given its essential nature and relatively predictable revenue. Consider this. Over $90 trillion needs to be deployed in the next 15 years globally just to satisfy infrastructure needs. We'd like to stress that aligning yourself with high-quality managers who have displayed consistent track records throughout multiple market cycles is extremely important. Need more information? Resources can be found on our website that dive deeper into these specific asset classes.